You know that feeling when you open a trading app or turn on financial news, and it just feels like chaos? Charts flying everywhere, red and green candles, experts yelling in opposite directions. Buy, sell, crash, rally. It's like standing in the middle of a storm with absolutely no idea what to do. But what if most of that storm is just noise? What if, underneath all of it, there's actually only one signal that really matters? Think about everything we're told to pay attention to. Breaking news that's going to change everything. TV pundits who sound 100% confident and are wrong at least half the time. Endless indicators, colorful oscillators, fancy acronyms, magical, secret formulas that promise perfect entries and exits. It all feels important, but there's a brutal possibility. Most of it isn't helping you trade better. It's just distracting you from the only thing that's actually true. We're trained to think that the secret to trading is more data, more tools, more information. But what if the real edge isn't adding more? It's subtracting. What if the real skill is learning what to ignore? Stripping away everything that's noisy, everything that's late, everything that's just someone else's opinion, until there's only one thing left on your screen. And that one thing is the price itself. Here's the core idea. The chart itself, just the price moving up and down, already contains all the information you will ever need to make a decision. Not because news or economic reports don't exist, but because by the time you hear them, the big players have already heard them, reacted to them, and placed their trades. Their decisions are already baked into the chart. Every candle, every bar, every tiny move is the market saying, this is what all of us together believe price is worth, right now. Price action is simply this: any movement of price, up, down, or sideways. It's the market's raw, unfiltered language. So if price is the market speaking, who is doing most of the talking? It's not us, the small retail traders clicking on our phones. The majority of trading volume comes from big institutions, huge funds, major banks, and insanely fast algorithms. If they make up most of the volume, then for all practical purposes, they are the market. And here's the part that changes everything. They can't hide what they're doing. When they buy, when they sell, when they quietly accumulate or aggressively dump, it all leaves a footprint on the chart. Every spike, every slow grind up, every sharp rejection from a level. Those aren't random squiggles. They're the combined footprint of very smart people and very fast machines, all trying to do one thing: make money. Your job isn't to outsmart them. You're not going to beat a server farm sitting next to an exchange. Your job is to read the footprints they leave behind and align yourself with them instead of fighting them. Here's where price action gets surprisingly simple. For all the chaos, the market really only does two things. It trends, moves strongly in one direction. It ranges, moves sideways, bouncing between support and resistance. Look at almost any chart, and you'll see it. Strong directional pushes up or down. That's a trend. Messy back and forth in a box. That's a range. Trend, range, trend, range. That rhythm is the heartbeat of the market. Now we add one more idea: inertia. Just like in physics, markets tend to keep doing what they're already doing. When the market is trending, inertia means this: most little pullbacks, most tiny attempts to reverse, will fail. Buyers keep buying in an uptrend. Sellers keep selling in a downtrend. So on a strong uptrend, those cute little dips, they're often just pauses before the trend continues. They look like the end, but most of the time, they're just the market catching its breath. But inertia behaves differently in a trading range. In a range, the market isn't going anywhere. It's stuck in a box with buyers defending the bottom and sellers defending the top. In that state, most breakouts fail. Price pokes above the range, everyone gets excited. And then it snaps right back inside. Same thing on the downside. False breakdown, then slam back into the box. Understanding this is huge. In a trend, inertia favors continuation. In a range, inertia favors fading the breakout and expecting price to get pulled back inside. Up to this point, everything sounds pretty straightforward. Read price, identify trend or range, Respect inertia. Trade with the big players, not against them. Simple, on paper. But here's the trap. Knowing this is easy. Actually doing it with real money on the line is where almost everyone fails. Because trading isn't just about charts. It's about your brain fighting itself in real time. In the short term, trading feels like a zero-sum game. For one trader to win $1 on that move, someone else has to lose $1. And remember who you're sitting across from at that table, not just other beginners. You're effectively competing with institutions, funds, and algorithms that live and breathe this 24/7. That's why discipline isn't just nice to have. It is the game, not vibes, not your gut feeling, not this one feels right. Discipline is methodically following your rules, especially when every emotion in your body is begging you to break them. The market is full of psychological traps designed to break that discipline. Trap number 1, getting trapped into a bad trade. You jump in on pure hope, usually late, right when the big players are quietly getting out. You're buying their profits. Trap number 2, getting trapped out of a good trade. A tiny, meaningless pullback scares you. You exit right before the real move finally happens. The market goes exactly where you thought, just without you. Trap number 3, and maybe the deadliest. Changing your entire plan after a loss. You move your stop. You double your size to make it back. You abandon your rules because this setup is different. At that moment, you're not trading a plan anymore. You're just gambling with a chart in the background. So let's bring everything back to one simple picture. On one side, you have the signal, the price chart, trends and ranges, inertia, the footprints of big players, your clear, tested trading plan. On the other side, you have the noise, TV pundits and social media experts, headlines designed to scare or excite, overcomplicated indicators you barely understand, and maybe loudest of all, the fear and greed inside your own head. The entire philosophy of price-based trading is a commitment to live in that signal column and ruthlessly, almost brutally, ignore the noise column. And maybe the craziest part is this. This isn't just about trading. We live in a world drowning in information, opinions, hot takes, and endless noise. If you can learn to filter that out, in markets or in life, and focus on the few signals that actually matter, that's a superpower. Whether you ever place a single trade or not, this way of thinking can change how you read the world. Less panic, less noise, more clarity. In trading, in work, in life, the real skill might simply be this: knowing what to ignore.